What's up, guys? It's Cash Flow Cart. Today we have the June dividend portfolio review and outlook. I'm excited to get into this, guys. I will give a quick life update. I've been on somewhat of a filming hiatus. I've been really busy lately. With that being said, I still have been releasing videos every Monday at 6 p.m. is the schedule. But as far as filming new content, it's been touch and go. I've had car problems. My phone broke. I've been finishing school. And, those are obviously things we can handle. I also just sliced off half my fingertip on a meat slicer at my day job, guys. So hopefully this YouTube thing works out, because obviously I am not the best at working in a deli. With that being said, guys, there's a lot we need to cover today. We have seen the market hit all-time highs recently, and we're going to talk briefly about how that affects me as a dividend investor and, what type of things you guys should be looking out for. I'm excited to get into it, guys. Let's do it. So you will notice I am on Schwab. Unfortunately, guys, all the TD Ameritrade accounts got moved to Schwab because Schwab did acquire TD Ameritrade. And sadly, the income estimator tool on Schwab is not nearly as nice as it was with TD Ameritrade. I'm pretty sad about that. If anyone has any good recommendations on, dividend trackers, dividend portfolio trackers, any software, go ahead and let me know in the comments what you use, what potentially I could use in the next video, because I don't know if Schwab's software is going to cut it, to be quite honest, but we will get into it. As you can see, guys, the total value of the portfolio is $57,217.98. That is an all-time high for me. Hoping to hit that 60K soon. And, big picture, I'm really hoping to hit that 100K mark soon. I think it's going to be awesome to have my portfolio cross the 100K mark and to document it here on YouTube with you guys. I appreciate all of you keeping up, all of you leaving comments on every video. I recognize you guys. So, yeah, like I said, May 13th, the TD Ameritrade account got moved here to Schwab. It was at 55,000 and change. Now it's at 57 and change. So, we are up, I guess, not quite 3% in less than a month. So that's awesome. But we will get into the income, as well as we will get into, the positions in this portfolio, guys. Let's go to investment income, and you will see, guys, I don't like this near as much as I liked the TD Ameritrade one. It has it just like the whole year scheduled out, whereas TD Ameritrade had like the following 12 months. But, we'll work with this. So today we are reviewing the June income. I am estimated to earn $177 in dividends in June. And it is currently late May. I have already received $71 in May, and I have an estimated remaining dividends of $38 and change. So I guess that's exciting. June is my middle earning quarter, with July just breaking that $300 level, guys. The total investment income from this portfolio is $2,323.50. And then on average, that comes out to $194 a month. Again, I've spoke on it before, but short term, I really want to get this average monthly income to that $200 level. And then from there, we're just going to hopefully keep going, guys. We talk about it all the time. Goal setting, anything you need to do, any short-term goal, medium-term goal, anything that keeps you invested and keeps you interested in building your account, guys, is a very good idea. Let me just put it that way. I've been building my income in this portfolio since I've probably been 16, trying to save portions of each paycheck, regardless of what job I've worked. And I will say, goal setting has been a huge part of it, guys. I encourage you guys to set goals, whether you're just starting out, if this is the first, dividend investing video you've clicked on and you're trying to get into this game, you're trying to build monthly income, just start with that $10 a month goal. Okay, guys, and trust me, it will add up. At this point, I'm starting to get kind of a sense of the compounding, as obviously I have kind of these decent months, I'd say, where I am able to pick up, multiple shares just from reinvested dividends. Guys, that's very encouraging, but enough yapping about that. Let's look at the positions. So Apple, let's sort by market value. My biggest position is Apple. Obviously, we've seen the NASDAQ hit all-time highs, and we will look at the charts. So anytime QQQ is hitting all-time highs, typically Apple is going to be, a driving factor in that. It is no surprise to see Apple back above that $12,000 mark. I have not added any more shares of this one in quite some time, but it is my largest position, guys. Here, estimated income. I guess we can use this. This is helpful. Apple is paying me estimated $63 in this position. Not a very big one. But with that being said, and we say it every time in these videos, I'm very hopeful about Apple's future in terms of their free cash flow growth and their commitment to rewarding shareholders. Right now, they are not using a big chunk of their free cash flow to pay back to shareholders in the form of dividends. But I think down the line, I think this, measly $63, we will start to see it grow. And I think my yield on cost is going to be, pretty impressive someday. I don't really have a timeline for that. I'm thinking 5 to 10 years, but I'll keep you updated on the channel, guys. Next up, we got Altria, $11,600 in market value, roughly. That's 250 shares. I spoke on kind of this round number. I got to 250 because I was like, I don't want too much of my income coming from Altria, but lately when it was down in those $40 levels, it was like sometimes too good of a deal to ignore. So I have paused my buying on this one at the 250 even mark. I think Altria is also up to $46. So I should be looking at a pretty nice unrealized gain in that one. But again, I'm not looking to sell anytime soon. And that generates me $980 in income annually. Hopefully with the next raise, I'll break that $1,000 mark from this one. That'll be awesome. Next up, guys, we have a REIT. This one seems to have kind of a cult following, and I am proud to be a part of it. My cost basis on it is not perfect, but we will visit that momentarily. I currently have 215 shares of Realty Income. It is priced at $53.72, bringing my market value on this one to $11,550. And in the next 12 months, that is estimated to generate me $677. That's pretty awesome. Again, we should note, I'm sure you guys probably already know, but this one is a monthly payer. It typically pays on the 15th of the month, if that is a trading day. And I will say, I do often get on here and preach, starting out, it really doesn't matter your pay schedule. You should more be focused on quality stocks. But, I'm going to go against kind of my teachings here and say, being in this one, it is very encouraging to get a paycheck every month. It's like, right now for me, it's nearly $60 every single month extra. So, I guess that's pretty motivating. But, it's not, I wouldn't say it's a sell point for this one, but it is kind of nice to have a monthly payer, guys. Let's move on. Next, we have Microsoft, MSFT. Obviously, this one has done well too, as we've seen the NASDAQ appreciate greatly. I still need to check out NVIDIA's recent earnings. I haven't actually looked into that yet. But in Microsoft, I have 20 shares for a market value of $8,610, and that pays me $60 a month, guys. Same boat as Apple. Microsoft and Apple both, they're not paying out a significant portion of their free cash flow to shareholders in the form of dividends. But, with that being said, they are growing free cash flow at a pretty impressive rate. Okay, do we understand that? And at some point, just because of the scale of these guys, at some point they're kind of going to have to flip that switch from a high growth play to more of the value play, and they're going to have to start, rewarding shareholders in the form of dividends. Okay, does that make sense, guys? So, we talk about it a lot. Every single stock, as you get more and more experience in this game, you're going to understand, what type of lens you need to take to each stock. And for plays like Microsoft and Apple, I would call these two more like yield on cost plays, if that makes sense. So they're more down the line, whereas plays like Altria and Realty Income, if you can be opportunistic, they're more like current income generators, okay? And you obviously can get some share price appreciation, but that comes in from being opportunistic and buying these securities when they are undervalued. And then as they return to their fair value, that's the share price appreciation. Does that make sense? Whereas Apple, Microsoft, these guys are free cash flow growth beast. And, they already have like two of the largest market caps in the stock market. Okay, so again, I'm just trying to get you guys thinking about, kind of the different lens you have to take with different securities. Pfizer, I've been buying up a lot in the low and mid 20s, and it's finally looking like this guy is about to crack above 30, which, knock on wood, I'm not trying to jinx it, but I know for my other Pfizer shareholders, this one's been a ride. And I feel like for the entirety of this channel, I feel like every video I speak on Pfizer, I'm always talking like, oh, I believe Pfizer is at a bottom. And I still have that, stance on this one, I guess, because of I am a long-term investor. I do understand that kind of bottoms in some of these stocks, they can take months. Okay. I've been building this Altria position for, more than months, for years, and it's finally starting to pay off, it seems. But that just goes back to the point of this game takes consistency and it takes patience. You have to build conviction in a few stocks. And guys, it is not a get-rich overnight game. It is tracking these stocks quarter after quarter and finding out, okay, where can I best deploy my new capital? And obviously dividends. Okay, so with that being said, I'm probably putting a hold on buying Pfizer. Maybe I pick up a few more. Maybe I try to get it to 250 shares even. But I do want to see if this one's going to break above 30 and hopefully confirm a reversal, guys. Moving on, Starbucks. I'll tell my story with Starbucks. I had bought it in 2022 at like $82 a share. Let's see if we can look at the chart really fast. Okay. So I had bought 60 shares in 2022 at like $82 a share. I put on two more at 91 and it started to run. And this was one where I really didn't build out the position anymore because I saw it as undervalued, but then it started to run. Okay. And then for over a year, it stayed at, in my opinion, kind of a more fair valuation. Okay. I still have this stock in my portfolio. I still have it in my watch list. And then what do we see now over a year later from that original, tranche? We do see a dip. I'm interested and I continue building the position. Okay, so do we get how that kind of works, guys? Sometimes you're going to start building out a position, and it's not that you're late or anything, but, immediately it just becomes, less attractive. Okay. It returns to more of its fair value. And that's where this patience comes in. Okay. So now I'm nibbling again at Starbucks. Okay. I was buying Pfizer. We're starting to see some, some sort of bullish momentum on Pfizer. And with that being said, guys, I can kind of turn my attention to Starbucks. Okay. So I'm using this as kind of a teaching point. I think you guys always hear me saying, be opportunistic, but it probably means a little more when I can show the charts. I can show how, I was kind of getting crushed on the Pfizer position for a while as I was building and building. As I saw it being undervalued, I continued building. And what happens is, after you build out this position, we start to see something that might look like a reversal with Pfizer. Again, I'm not trying to jinx it. And then the way the market works is, okay, now Starbucks is interesting. Okay, so can we see here how I'm trying to be opportunistic and deploy my capital into, the best opportunities, get the best bang for my buck. Okay, and with Starbucks, I had to wait a year and a half before it was even time to continue adding to this position. Okay, does that make sense? But you don't just take something off your watch list. This is not a game of just setting and forgetting, guys. This is not mutual funds. This is not ETFs. This is, opportunistically picking undervalued dividend payers. Okay. And I haven't added any new positions to the portfolio in a little while, but I am excited to do so I can get more of like a real example of what that looks like for you guys. So, hopefully that wasn't too wordy. Let's move on, guys. Next up, well, where even was I? The market value on Starbucks is $5,650, and that pays me $160 in estimated annual income. And then T. Rowe Price, the smallest position, coming in at $1,400, guys. That only pays me $60 in estimated income. But I am excited about that one, and I have been trying to build it out a little more. We'll head over to it. Well, first off, let's look at, QQQ. All right, what do we got here, guys? Literally this week, I'm filming this on Wednesday, May 22nd. This week, I believe it was Monday, or maybe even today, the NASDAQ is hitting an all-time high, right? Same with the S&P. They've both hit all-time highs this week. Okay, so maybe there's a lot of naysayers who are like, why are you buying dividend stocks? The market's appreciating. But, in this game, the thing I love about dividend investing is regardless of what's happening, to the market as a whole, I feel I'm always going to be able to find, one or two opportunities that I'm interested in, that I deem as, value plays, undervalued stocks with, impressive free cash flow growth and a good starting dividend yield. And, whether the market's in a bear market, maybe that means there's more opportunities. Whether the market's making all-time highs, again, maybe we have to be a little more selective. But with that being said, guys, I just want to say, do not let your foot off the gas as a dividend investor ever. Okay, no matter what the market's doing. I've talked on Altria here. I don't even know how I got this one pulled up, but I've been building this position. I've kind of been watching this wedge or triangle, whatever you guys want to call it, for, years, literal years. And, just recently, it kind of seems like I might get some share price appreciation on it. Let's check out the position. We're kind of getting on a tangent here, guys. But I have 250 shares of Altria, like I said. The average price is $44 and change. Altria is trading at $46 and change. So I'm up roughly $2 a share for an open profit right now of, $440. Awesome. And you're like, oh, it's taken you years to make this profit. Well, I've also collected, quarterly dividend checks on this one, and my yield on cost right now is roughly 10%. Okay. So, just like with a lot of things in life, guys, dividend growth investing rewards the patient. And I just want to get on here and say, guys, do not let your foot off the gas. I'll say it again. No matter what the market's doing, we have to stay, we have to keep our North Star in mind. What are we doing here, guys? We're building a portfolio that produces a growing stream of income for years to come. And I mean, if that's your style of investing, I'm glad to have you as part of this community, guys. Feel free to hit that subscribe button. If you enjoyed this video, please hit that like button, guys. I will be coming out with a lot more good content, and I'm excited for you guys to share in this journey with me. This is going to be the best dividend growth investing community on YouTube. I know that for a fact. Let's claim it. Everyone, this is Cash Flow Cart. Take care, and I'll catch you in the next one.